Awesome. So the session is being recorded. Cool. So we'll start off with Aussie CAD. All of the information from, excuse me, I don't know why I'm burping now, but all of the information from last week is still there on our charts. We'll obviously just delete whatever is not relevant. We'll adjust. We'll see how things have changed. So otherwise, getting into Aussie CAD, just our general structure from a daily or from a higher time frame, at least we've got momentum. We're inside of this corrective structure, but our focus is basically just on this most recent price action. So most recent price action on a daily, there's our drawing stuff. Why are they at the bottom? Let's have our drawing things on the top. But otherwise, most recent structure on a daily, we can see that price action was obviously being corrective as we are making our way to the downside. And then now we can see a change of this character. What happened on our left-hand side looks totally different to what's happening here. So obviously we can see that there's a change in what's going on. We can see new momentum coming into the market. This new momentum has been able to break this resistance area over here. We broke and we retested nicely. And then obviously now you guys can see we've broken and we've closed above this resistance up here. So obviously we can see that there is some upside momentum. We wanna by all means trade in the direction of these buyers that have been involved in this market right now. Let me just delete this because I don't think this is really relevant to us anymore. Otherwise, yeah, we'll just leave these horizontal lines so that when we're on a 4-hour, you guys can still reference where we are within the high time frame structure, or at least from a daily perspective. Otherwise, on a 4-hour, the structure that we were looking at last week was we were looking at this ascending structure here. We obviously were looking at this being some sort of a first touch, this maybe being a second touch, and this price action being somewhere in and around our third touch, some potential third touch region. But obviously, price action has broken above. Now, what we're going to do is we're just going to evolve the structure and just accommodate for whatever's new, whatever's extra there, include whatever new highs we've got there. Conclusion being, okay, cool, we're in an uptrend. If we want to delete this resistance trend line, we can delete this resistance trend line anyway. Why do I say we can delete it? Is because we're not really interested. If we are going to sell Aussie CAD, we're not interested in taking any risk entries because we can see there's a lot of momentum moving to the upside and we can't take a risk entry in the opposite direction. It does not make a lot of sense. So what we're going to do is our only option would obviously just be to wait for some sort of a reduced risk entry. You guys know we've broken above this higher time frame daily, but I want to delete this trend line here because I'm going to add this as, or I want to take this into account as our most recent resistance that price action has broken above. And obviously for us to look for a reduced risk entry, all we need to see is just price action breaking back below this resistance area and then coming back to obviously retest a level of structure. What level of structure? We're looking for a retest of this level of structure that we've broken above, broken back below. Where do we want to trade in this area here? We want to trade at some area or some momentum shift that price will obviously create when we do, or if we do break structure with momentum. We're going to create some sort of a momentum shift. And obviously we'll look for price to terminate at whichever momentum shift is created, hopefully next week. But otherwise, in a sense, or at least for our buys, we're still going to look at these PRIs that we've been waiting for price action to at least come to for upside continuation. Why? Because we still want to trade in the direction of higher time frame momentum. Higher time frame momentum right now we can see is to the upside. All we need to do is wait for that corrective structure to pull deep enough to, number one, increase our probabilities. Number two, we want to get good risk to reward ratio on the trades that we take. So we buy at, or at least we try and buy at the cheapest area that we see. We try and sell at the most expensive area that we can see. So otherwise, on Aussie CAD for next week, I am more bearish than I am bullish. Obviously, you guys can see where we're bullish from, but look at the overall structure. Where are we? Can we be bullish right now? Can we be buyers where we are right now? It makes no sense. We're at resistance. So for me on Aussie CAD, I'm going to be more of a seller going into next week than I am going to be a buyer, just because of where we are within the structure. We do know that if price action does pull down, maybe even violate this support over here, at that point, we obviously switch our bias or we reevaluate and see if we can then be buyers, or should we just stick with our bearish bias and see how low we go. But otherwise, for now on Aussie CAD, I'm bearish bias. We'll put a young purple tag there. We'll go on to some Aussie Swiss franc. So from last week, let's just go up to the daily before we even get into last week. So on a daily, how we've been making decisions here is we've just been following just the most recent price action, making decisions from there. So most recent price action, we're in this descending structure. We saw this descending structure didn't break with a lot of momentum. So obviously we're in some sort of a corrective structure. We identified extreme highs, extreme lows. Because we're stuck inside some sort of a range, we want to trade the extreme highs or the extreme lows. We already tapped into this POI here. We can delete that. We can delete that. All of this stuff means absolutely nothing to us. Obviously, you guys can see we still have this high POI that's still left open over there. Obviously, for us to be able to buy or to get into any buying opportunities, we've already tapped into whatever support we could tap into here. We're going to go down to the smaller time frames and obviously look. But looking at things on a higher time frame, what we have is the most recent extreme low and the most recent extreme high that price has created ever since we've been stuck inside of those. So the safest areas for us to be looking to trade are obviously our extreme high and our extreme low. Extreme low for bullish buys trading opportunities, extreme high for bearish buys trading opportunities. Where are we? We're somewhere in the middle of our extreme high and our extreme low. So if we're in the center of some sort of a range, the only thing we can do is look for chart patterns that increase the probabilities of us making a specific decision. If we don't find any chart patterns, then we can't be doing anything. Otherwise, here on a 4-hour, I don't think I'll be trading this, but let's look at it anyway and let's talk about it, just because. So inside of all of this chop, right, we had price action tapping into this POI that we were looking for over there. We created some sort of a head and shoulder structure. You guys can see there. We've broken the neckline of the head and shoulder structure momentum. All of this momentum here has even given us a new lower low below all of these lows that we see inside there. Yes, we're still stuck inside of a range. It's clear. We just grabbed the low of the range. We didn't impulsively break and stay below. So we're still stuck inside of this range that we have going on there. So obviously, things are a little bit dangerous. But what we can see is that momentum has been to the downside. We have broken some structure. We have a reversal structure. We can break and retest at the neckline of the structure. So obviously, on a smaller time frame, if we do find structures that obviously maybe allow us to take a nice short, the highest POI that we find here is up very high. It's up here. But otherwise, I thought maybe we'd get some sort of a corrective structure if we came down to the 1 hour. This doesn't look like a nice structure to trade. Just move my charts one side. This doesn't look like a nice structure to trade. Because this resistance price is like literally right at this resistance, more of horizontal resistance. Like think of this as just equal highs. The price is just at these equal highs. But what we can do, maybe let's just be safe. And if we're going to look for a bearish bias trade, let's look for a reduced risk entry here. Let's look for a reduced risk entry. We've got a level of structure. If price violates this level of structure, we're looking for price action or we're looking for trades after we've broken back below this level of structure over here. Let's just be safe. Because I just don't trust the fact that we're inside of this overall range. And obviously, if you're trading inside, we can't be surprised if we get involved inside some chop, if we get unnecessary stop losses or whatever the case is, because we're inside of a range. Price can chop as much as it wants to chop here. Yeah, so I think what I'm gonna do for us is just Frank, I don't think I'll be trading it, but let's watch it. Maybe let's just set an alert above these highs and see what happens here. But in terms of probabilities, I don't see a lot of probabilities unless a clear structure develops for us that we can trade. If there is no chart pattern that we see that we can trade, then let's just leave Swiss Yen. I mean, Aussie Swiss Franc, we're in the middle of things. Let's not involve ourselves in the middle. AJ. Let's go up to a daily. So AJ's been confusing as hell. AJ's been very confusing. So AJ, we're stuck inside some sort of a sideways moving market. Extreme lows, extreme highs. We're inside of these extreme lows and extreme highs ever since we created them. We had this descending structure, but this descending structure broke with a lot of momentum, obviously shifting our bias bearish. So last week we were more bearish bias than we were bullish bias. No. Last week we were bullish bias. Sorry, my mistake. Last week we were bullish bias. We were basically just we were bullish bias on AJ, and I think we were bearish bias on New Zealand dollar here. We were hedging. And on AJ, we were looking for price action to basically come back inside of our range and then give us upside continuation. But this is obviously, we can see this is our last evidence of sellers, guys. And as long as we're inside of this momentum, this impulsive move to the downside, this is still a seller's market. Things have been bearish. Obviously, this is still a seller's market. This is momentum that has been able to break structure. Yes, we can understand that we've been corrective because we've broken back above, this support over here that we just broken. Yes, we've been corrective, but we're still inside some sell bias momentum. So I think I'm going to trade with caution on AJ. Let's just look to trade AJ in the direction of this momentum. Let's try and be bearish bias, but from this highest POI here. That's the only place where we can be bearish bias. In terms of us following through on any bullish bias trading opportunities here, it's clear enough. The only momentum shift that we have on a 4-hour, let's just delete this first because it's just confusing us. Where it is there. That's the only momentum shift that we see on a 4-hour that price action hasn't really tapped back into. So for us to be able to buy, oh, it looks like we did. Looks like we did. Not deep enough, but we did kind of tap into that area there. And let's just delete this because this is a POI on a smaller time frame. Price is already there. Yeah, I think in terms of us looking for a bullish buy trading opportunity, this would be the only place where we can try and find any buying opportunities. But as of right now, let's just be more bearish bias than we are bullish bias trading in the direction of this momentum. I was hoping, I'm just very confused with AJ. I don't know where AJ is going. So for AJ, let's just trade extreme highs and extreme lows. AJ, let's trade. I do want to be bearish bias. Obviously, you guys can see overall ascending structure. We broke to the downside with momentum. We want to sell from up here for the longest of time or up here, but we're very far and we can see that price action is in some sort of a downtrend or whatever the case is. We are close to our extreme lows. So what we can do is we can just manage this trade or we can adjust our risk because we can see that there's an important support over here that maybe we might struggle to break below. If we do end up selling AJ, then let's sell AJ at some sort of a reduced risk, or let's try and enter AJ at reduced risk entries because we're inside of this chop and AJ can chop us however much she wants to because we're in the center. Let's go on to some AU. So from AU, last week we were looking for this young small buy before the sell. So otherwise, looking at the high time frame structure, we had some sort of a descending structure. We broke below the descending structure. Obviously, momentum broke back into the descending structure. So naturally we want to trade, we want to be bullish because of this descending structure. And also because of the higher time frame structure, guys, we've got some momentum to the upside, right? We've got all of this momentum and we've got this overall chop. So kind of we want to be bullish because we're expecting that, okay, cool. As long as we're inside of this extreme high and this extreme low, all of this here was a buyer's market, right? So we're expecting maybe market will follow through on that momentum to at least the 90% rule or whatever the case is on a high time frame. So it seems kind of safe for us to be higher time frame bullish bias rather than higher time frame bearish bias. Now coming to just the most recent price action. Most recent price action, we can see that there's a nice momentum shift over here. Obviously, this is the full move that we see breaking this important support level of structure here. But we can see that price reaccumulated here. We've got a nice big momentum shift and price obviously broke structure after this big momentum shift. So we're naturally looking at this area because we previously saw sellers coming into the market there. If price comes here and whoever sold here is still looking at the market, who knows, maybe they might still find interest. What we can also see if we drop down on a smaller time frame, that is resistance, by the way. On a smaller time frame, we've got some sort of an ascending structure. How do we know that this is a corrective structure? We see resistance being broken above, being broken back below. That's our first indication of corrective price action. Already, we know we're looking for some sort of a corrective structure. Now, last week, we were expecting the price was going to hold from here, but you guys saw we broke below there, but we broke back above. So let's just accommodate for the new price action that we have, include these new lows. Everything still stays the same. I don't even feel like I need to delete this forecast that we had from last week. We're looking for the exact same thing. We're not interested in the buys. Obviously, we can see that the sells, there's a lot of confluence for us. We see a lot of sellers coming into the market over there. We obviously have price being at resistance. We obviously have a beautiful ascending structure, giving us our first touch, second touch, and third touch that aligns with this horizontal resistance as well. So things align for us in this area. Let's trade what we see. We see an ascending structure. That signifies us at least saying that momentum is slowing down as we're coming towards this resistance on a 4-hour. Some sort of sign that whoever was buying aggressively in this momentum here, this is a deceleration, or at least that's what we think it is right now. So all we're going to do is just wait for price action to break above these highs. Once we break above these highs, we have a point of interest over there nicely marked out. All we're doing is we're waiting for a structure, some sort of an ascending structure, head and shoulders, a double top, to terminate inside of the structure for us to be able to trigger ourselves into the trade for that downside movement. Then obviously we'll just target the 90% rule where this overall corrective structure started. If we do pull lower, then obviously our higher time frame bullish bias does come into play. So for now, we're more bearish bias than we are bullish bias on AU. So let's look to see if we do get that nice third touch entry and young short on AU over the course of next week. This setup looks like a very nice setup. AU's just been a little bit clean for the last month or so. So on Swiss Yen, so basically Swiss Yen, we were a little bit bullish bias looking for a retest of this, obviously descending structure, all that nice good stuff. But higher time frame, guys, we can see that we had this ascending structure over here, and we're inside some sort of a chop. Inside of this chop, we want to trade extreme highs and extreme lows, but obviously extreme highs are so far. So all we've been doing is just trading the most recent price action, kind of similar thing that we've been doing on AJ. So for now, taking into account context, where are we? We're closer to resistance than we are to any sort of support. So for this week, guys, I'm gonna be more bearish on Swiss Yen than I am bullish because we are close to a resistance area. It makes a lot more sense to be a seller from resistance than it does to be a buyer. For us to be a buyer, we'll see if price action does pull down. We'll see if we do retest the level of structure that we've just broken below, broken back above, or we'll see if we retest this level of structure that we've broken below and broken back above. But right now, where are we? We're at resistance. This resistance, we can see there's a momentum shift here, nice big bearish engulfing. This momentum shift, we managed to break this level of structure and this level of structure. And where is it? This level of structure over here from the sellers that came into the market there. So obviously we can't buy into those sellers. So over the course of next week, Swiss Yen, I'm going to be more bearish bias than I am bullish bias. Let's just see if we can find a nice chart pattern that can give us a better trading opportunity. Let's just do this now. We've got support. We're in some sort of an ascending structure. We've got resistance. We've got a young first touch. We've got a young second touch. So naturally, so our probabilities increase for us at a third touch of our resistance trend line. Cool. There's our bearish buy setup for next week on Swiss Yen. We're at resistance. That makes more sense than buying. Let's go on to New Zealand dollar CAD. So for New Zealand dollar CAD, I'm just gonna say what I said last week because this pair is still moving up. We're still inside of this momentum. And like I told you guys, that the way that I trade, I'm looking to catch momentum. If we're already inside of the momentum, I don't chase the trends. I don't chase the whatever. I want to trade and I want market to send me into profit or to send me, either take me out or take me into profit. We can see that market is moving already. We have a descending structure, all these levels of structure. We're inside momentum. Things become simple. All we're looking for is for a corrective structure. Once we have a corrective structure, that corrective structure is going to give us some sort of a first touch, second touch, third touch, or whatever corrective structure forms for us to find upside continuation. Just going to cut things very quickly on New Zealand dollar CAD because we're inside of the momentum. There's nothing that we can do. Even if I wanted to say sell from here because we're coming towards resistance, there's momentum. If we wanted to sell, we needed to wait for a reversal structure at least so that we know that all of these buyers are then out of the market before we decide to trade against all this obvious buying momentum. So either way, whether we want to buy, whether we want to sell, New Zealand dollar yen, a lot of patience. So I'm not going to be trading. I mean, New Zealand dollar CAD, a lot of patience. So I'm not going to be trading New Zealand dollar CAD until we slow down, until we stop moving. Cool. So New Zealand dollar yen, the structure literally played out exactly as we were looking for it last week. Basically, last week we were looking at first touch here, second touch. We were waiting for this third touch of structure. Unfortunately, this third touch came on Friday and at the end of Friday. So there's no way that we could have found any trading opportunities there. Let's just do this, delete that. But otherwise, let's remind ourselves what's going on here on a higher time frame. So on a higher time frame, we've got this ascending structure, right? Yes, we do understand this ascending structure. Price can come up and give us a third touch of structure before we see that momentum going down. So obviously that's something that we're keeping in mind as we're dropping down the time frames. That price action, there is a resistance, yes, but price action can come and violate this resistance if it wants to. If there's not enough momentum, if all of these sellers here, if there's not enough momentum to continue to send prices down, price action can break above resistance to seek for that supply to send markets down or to send price action down. So obviously, yes, we can break above, but we're going to take into account the context of the lower time frames as well. On a smaller time frame, we've got this chop. We've been moving sideways, breaking resistance, breaking support. Nonetheless, it's an expanding structure. We're moving sideways. This expanding structure, all we've been able to do is just find our resistance, first touch, second touch. We'll be looking for price action at this third touch. Obviously, momentum towards a place where we are looking to do the opposite. We are looking to sell. We see a whole bunch of buyers jumping into the market there. So naturally, so we already know that if we see people doing the opposite and we want to sell, we need to wait for all of these buyers to show us that they have exited the market. How will we see that? We will see that if we see a reversal structure, some sort of a reversal structure. If we don't find a reversal structure above this resistance, all we need to see is for the momentum to push price action back below our resistance, and we will see. Once momentum push price action back below resistance, we'll have that corrective structure that at some point will come and retest the level of structure that price action is broken above and broken back below. So for New Zealand dollar yen, since we've got all of this nonsense coming towards where we want to sell, we are bearish bias. All we need to wait for is for a reversal structure. Done and dusted. Once we see a reversal structure, we can do the things to be done. What I also maybe want to do, let's try this out. On a smaller time frame, we're like I told you guys, always have rules. So my rules, this is not a swing high as yet. Price has not confirmed that this is a swing high that we can use this to draw a trend line and for us to say we're going to move down. This is not a swing high as yet. But what I want us to do is I want us to force a structure so that we can imagine, be able to see where, if probabilities arise, where could those probabilities arise for us? So number one, the setup that we're looking for is obviously a reduced risk entry, price action breaking back below and coming back to retest, and we find a reduced risk entry. Number two, this is the only, if only price action moves away from this resistance area. If we move away from this resistance area, obviously we'll confirm this as a swing high. Once we've confirmed this as a swing high, at that point in time, if we don't find a retest here, or if we get stopped out or whatever the case is, we can then anticipate price action giving us a third touch before we move down. So for now, this is not a setup that exists because this is not a swing high, but I just want us to imagine that if we do see the setup evolving, this is how I will evolve with structure and look for my third touch termination somewhere there. So the only setups that are going to allow us to sell New Zealand dollar yen is a reduced risk entry because there's too many buyers right now, or a risk entry after we've confirmed this ascending structure over here at this third touch. Nice English. Let's go on to US30. So on US30, let's just look at higher time frame context just to see where we are in overall structure. So where we are is there's some resistance, right? We have resistance, we have price action breaking, closing above, closing back below, closing above, closing. Nonetheless, once we see price action closing above a level and closing back below a level, first indication of price being corrective around that level of structure, whether it's a resistance trend line, whether it's horizontal support, doesn't matter. Cool. So we're being corrective around a level of structure, right? So naturally, so I know on a smaller time frame, when I drop down, I'm looking for a corrective structure because I see corrective nature. Even here on our smaller time frame, we have price action breaking above our resistance, breaking back below, breaking above resistance, breaking back below. So we've got a corrective structure. Anyway, trying to isolate this corrective structure, we see that we've broken to the downside. Yo, I didn't notice that a 4-hour actually pinned there, hey? I didn't see that. It's the first time I'm actually seeing that there's a pin. There was actually a pin here on a 4-hour. Yeah, I don't think I would have been so much of a seller from here if I saw this pin. Damn it. But yeah, it is what it is. It is what it is. Then otherwise, just looking at the most recent structure, guys. Most recent structure, we can see price action creating lower lows and lower highs. The last place where we saw a bunch of buyers was this big bullish engulfing. We've broken below this bullish engulfing, meaning that whoever came in here, there's more of the volume that came in here selling than there was the volume that came in here buying because price broke below. Cool. Otherwise, we've got this corrective structure over here. We see momentum to the downside. So basically, what are we doing over the course of next week? Let's just delete all of this nonsense because, okay, let me just do this first. And then delete this. It's not relevant to us anymore. Cool. Taking into account this current context now, where are we within the market? Probably maybe we're going to 90% rule or whatever. Who knows? I don't know. But nonetheless, let's take into context what is going on here. So on a 4-hour, we've got support, we've got resistance. After we created this resistance here, where is the next low that we see on our charts? Here is the next low that I see on my charts. So I'm basically finding, or I'm finding my extreme levels of structure. There's my support. There's my resistance. There's the next low that I see after this support was broken. There's the next high that I see after this low was created. So there I have my extreme levels of structure. If ever I was going to try and because I understand that I'm inside some sort of a chop here. I'm at resistance. Price is breaking above and below that higher time frame resistance. I know I'm in a corrective structure. So all my job is to find where is the next potential momentum? Where could the next momentum come in? This is the new corrective structure that I've got going on here. We still have the extreme low. Let's delete the small ones here. We still have the extreme low of this overall corrective structure, whatever the case is, on the extreme high. But otherwise, where are we within the context? We see a bunch of buyers coming in here that support. Cool. We see a first touch, second touch that aligns with our support. So already I know that the closer price action gets to here, the less I want to be a seller, the more it makes sense to be a buyer because I'm going closer to support. Otherwise, I have a resistance trend line here. I also have a bearish engulfing. Nice bearish engulfing over there. Nice momentum shift. A nice momentum shift over there. So simple enough. What we need to see, remember our rules for entry. Number one, we want the market to create a level of structure. There's our market, our momentum shift. Number two, price action must move away from our level of structure. So once we break this low, only and when we violate this low and create a new lower low here, that's the only point in time where this point of interest, where this momentum shift becomes valid, where I can say the sellers that came in here are more than the amount of buyers that jumped in at this low, only when price action breaks this low. So obviously, that's the only time we're going to be able to trade this momentum shift here is when price action breaks this low. And that's obviously a nice sell biased setup for us. So for downside continuation, all we're doing is waiting for US30 to come up to this POI here after we break this low. For upside continuation, when we break this low, if we have not tapped into this high and we keep on going down, then obviously we look for our structures that are forming here, any descending structure, any double bottom, any inverse head and shoulder, anything that gives me an opportunity to be a buyer where I expect buyers to be, I'm going to be a buyer. So that's it on US30. US30, what I'll do is for now, I'll put an orange tag there because I'm definitely game both directions. Buying US30, selling US30, whichever direction momentum gives me a trading opportunity, I'm going in on US30. So we'll put an orange tag there. We're looking to trade US30 in both directions. Obviously, I explained to you guys how we're going to validate each setup for each trading direction. I'm 100% done with the analysis there, guys. You guys know exactly which directions we're trading. Yeah, let there be peace in the streets, guys. Let there be peace in the streets. Let our brothers and sisters be safe. Otherwise, if you guys are going to catch this on YouTube, if you came late or whatever the case is, browse the description and like and subscribe and do all those nice things. Cheers, guys.